I need to get this information. And someone told me about...
It's not even the price of trying to work. I'm just trying to work out what the information looks like.
It looks like. And the API docs say this, and I'm getting this information. Welcome to The Local, where Marcus and I talk about all things institutional and crypto, particularly with a focus on markets and trading. We've done a few of these now. We really enjoy chatting through the various things that are going on in the space, institutional and otherwise. A couple of episodes ago, we looked at the simple question of what is the price of Bitcoin?
Which we didn't answer.
No, and it hopefully revealed a bit of the nuance around why, what. Trading firms, high-frequency trading firms, market makers, people who care about the real minutiae and details of trading. Hopefully, it revealed some of the stuff that they go through to do the jobs that they do. Mm-hmm. So we're going to explore that concept a bit further today, talking about what it would take early stages in terms of how a market maker goes about building its business and what's necessary. So we talked about the idea of you needing to know what the Bitcoin price is, and lo and behold, we weren't able to answer that question.
I think there's one of the things that we thought was interesting to talk about was, okay, we can talk about getting these prices from these different places, but how can you even begin to do that?
Yeah,
I mean, what are the challenges to even get the prices into your system?
And to put that another way, we know that Bitcoin is trading on lots of different venues. Mm-hmm. Geographically distributed across the world, Tokyo, Singapore,
Virginia,
and we talked about in that episode, the nuance of there's decay of information in terms of its value as it travels between those different venues. You can't know what all of them, the state of all of them at any particular point in time.
The speed of light is a real thing.
It's a real thing, and there are in traditional finance companies that spend millions of dollars building infrastructure to move this information as fast as they can between these different centers so that their systems can make informed decisions. And so answering the question about what is the price of Bitcoin, yes, of course, if you buy and hold or are click trading on a screen, you don't really care about the latency between Singapore and wherever you happen to be. But for us and our systems and our business, it's important. But getting that information peels back a whole layer of other problems. So if you're going to build a market maker, this is essential because you might be trading on all of these venues or some of them. You might be trading on the ones where more volume goes through or less volume goes through. You might be trading products that are related to Bitcoin in some sort of way. So how does the industry gather this information? What does it do? How does it get it?
Well, that's one of the things that makes crypto a little bit different, isn't it? Than traditional finance. So the main protocol in traditional finance is FIX.
Yeah, and it's still bits of data.
Financial
around, right?
Information Exchange, I believe it stands for.
You pass your FCA regs if you ever fell under that umbrella again.
No, I'm well out of the scope of that. I think
black mark.
Yeah, but so actually in traditional finance, this has been standardized for a long time.
Yeah. And what is it? People talk about bandy a fix around. Can I get a fixed connection? Blah blah blah. What does it mean?
It's a protocol.
Yeah. So a set of rules.
A set of rules. Yeah. A set of rules which determine what the information is going to look like.
Okay. So structure.
The structure of the information
and what you can include in the various bits of information.
Yeah, and it's not all encompassing. You don't have to include all the information in every message that you send between the machines.
Yeah.
But it kind of gives you a framework by which you can say, okay, well, if I want to send a message which is going to include the current price that I can buy for and the amount that I could buy, a top of book or something like that, we might call it. It tells you the structure in which you need to send that and what tags.
Okay. What are tags?
Tags are sort of the labels
okay.
for the fields.
Yeah, so for field value.
Yeah, exactly. So it's like this field 35 might be the log on tag, and so this is like you need to tell them if you're going to log on, you want to connect and log on, or there's another tag. I can't remember all of the tags, but there's tags for what the order quantity is or what the order price will be, right? Okay, and these are all essentially, you can think of them as just labels.
Yeah. And this protocol is defined in that way and sets the rules.
It sets the rules, and so this is by all of the traditional finance trading on exchanges done
Yeah.
via this protocol.
And not just exchanges as well. Like I mean, you'll have OTC platforms that can receive and route out the messages via FIX as well. And it's, like you say, it's
been around since the 70s, 80s.
Like me?
Yeah. I'm going to say it's. Did you invent it?
It's a non-profit, right? There's no one getting paid for it. It's a protocol.
I think it's just like it's like any sort of protocol.
Public good.
People have to understand the rules,
and it evolves,
and that allows
yeah,
and it's evolved. Yeah, I think the latest one is FIX 5.0 SP2.
Right, you think? Not like you've been looking at it recently.
But crypto is a little bit different.
Yeah.
So, and this comes out of this sort of idea that actually it kind of came from a different place, right? And so actually, there's no standard way in crypto to send the information.
Okay.
And that's actually one of the challenges that comes with the space. So, in a way, if your code can deal with this FIX specification in TradFi, be very simplistic here, but you could, in theory, then talk to everybody.
So you point your system
at the CME
fire
or the
hose,
NYSE or whatever, right? And if your system can understand
interpret
FIX,
it in the same way,
FIX on a simplistic set, then you could actually talk to all of them.
It sounds like a good idea.
Yeah. In crypto, that's not the case.
Right. So we're talking about gathering the prices. We're talking about getting price from one venue and price from another. And we're going to use some sort of transport layer or some sort of transport to get it to us.
So the FIX is still being sent over a transport layer.
Yeah.
And there's still some even lower level protocols that it lives on top of that we won't get into.
No, boring.
This is not a computer science podcast about TCP and UDP.
It's about the fact that we can't answer what the question, what is the price of Bitcoin? Let's go and get some prices.
You don't want to talk about TCP versus UDP?
I know, thanks.
Okay.
Although I do know some interesting stuff about that, but
that for another day.
Actually, interesting to me, interesting to no one else out there. So we're still trying to get the prices.
So we're talking about this is you're still transporting the information over some sort of wire, over some sort of cable, and it's one layer above the transport layer. But essentially,
there's no standard.
There's no standard in traditional finance. Kind of standard in crypto. There hasn't been a standard, and I'm only talking about centralized exchanges. Let's not even get into the realm of DeFi right now.
No, let's talk about DeFi.
But, I mean, DeFi is completely alien to even
like WebSocket.
Yeah, well, no, it's still you can stream the data of we could get into so a lot of the crypto data is coming over a WebSocket, which is
centralized and DeFi.
But
the structure of it, the labeling,
no consistency. Exactly. So that's one of the problems, right?
And this is all the same type of information. It's like, what is the price?
In DeFi, it's slightly different type of information. Yeah. So let's talk about centralized limit order books in the sense of which
should effectively be the same thing coming from different places.
They are trying to transmit the same information.
Right. So trades, order book information, top of book
information, funding information,
and all of these
open interest.
All of these venues are running sort of usually limit order books that are price time priority based.
Exactly. Time priority based matching engine with a limit order book. Should be the same data. Is the same data, but because of the way that the system's grown up organically, is different shapes, different structures, comes with different labeling, and it's not even different labeling. It might be one venue might send you. So one thing you might want to know when you connect up to your account is say, actually, what's my balance? Yeah, I need to know what my balance is before I can start putting any trades on.
Because normally they won't let you do trading without some sort of balance. Normally,
I'm yet to find someone who will let you do zero margin trading.
There are ways around that.
Maybe it's an innovation. You might want to know your balance, right? Before you can even think to put a trade on, you might want to know what your balance is. And some exchanges will send you your balance when you connect to them. Others won't. They'll only send you when your balance changes.
When you actually connect, they'll go, this is what you got. Go for your life.
And other exchanges, when you connect to them, might go, well, they might not send you anything because your balance hasn't changed.
Well done, you've connected.
Yeah, exactly. And your balance hasn't changed.
Yeah.
And so you might have to
send another message
to say, actually, can you give me the snapshot of what my balance is?
And this is before I even got my Bitcoin price.
This is before you got your price. Yeah. Well, this is I'm talking about in general things that you might want to do.
Yeah. So different behaviours, different patterns of how you get to the point where you could even begin to think about trading.
Even think about getting a Bitcoin price.
Right.
Because let's forget about balances and accounts or something. Let's just talk about market data.
Yeah.
So you want to connect to their order book.
Yep.
And you want to find out what they're saying about their order book. Even the structure of that is not the same.
Right, okay.
Which it would be in FIX.
Yeah.
So this even the messages and that they're sending you, you have to figure out what's the Binance specific format.
Okay.
What do these fields even mean?
Yeah.
Right, so OKX.
And then digging into docs.
Yeah, docs.
that
And
are,
exactly.
Or certainly used to not be kept up to date at all.
Or maybe
you've
you've written in another language and then translated into your language.
Yep.
OKX on their order book messages, for example, just send 2 extra fields.
Okay.
So they send the price,
Yeah.
the quantity for a level, and then 2 extra fields that their docs tell you just ignore.
Okay, nice. Nothing to see
Nothing
here.
to see here.
And then they probably occasionally put information in there.
Can you imagine if the NYSE was broadcasting this data to all of these people who are trading in all these top US stocks, and were like, "We're going to send you some information. You just got to ignore it. Actually, it's not part.
Particularly if it took up like
it's half the
memory
message
as well. Yeah.
Well, it's half the payload in the message.
Wow. Okay.
Yeah. So that's a challenge. If you want to start 101, before you even get into thinking about having the different prices to be able to discount and aggregate them into one view of what Bitcoin price is, you have to get over this idea of connecting to the venues themselves.
Right. Okay, and so this begins to peel back we're...
This is why it's at the intersection of, which is something I find very, very compelling and very interesting about our space, is you end up with these problems that are the intersection of a lot of different fields.
Yeah, a lot of different skill sets.
Lots of different skill
Computer
sets.
science,
you need
networking,
to have,
finance.
You need to have a reasonable understanding of computer science to even to understand what a WebSocket transport is.
And certainly to use it well.
I'm talking about if you're not just going to use the CCTX
or
some SDK or something. Like
ask LLM to connect me to Binance WebSocket or something.
Yeah, exactly. And I would postulate if this series is how to build a market maker, there are not going to be many institutional market makers that are not hand-rolling their own stuff now. There might be some solo guys.
And it's changed, right? You used to be able to do that, certainly when I first started noodling around in the space.
I'm going to say, didn't you get your first piece of data via CCTX?
CCXT?
Thank you.
Yeah, possibly. I certainly built around that library in the past, yeah. And you could do these things, and you weren't competing with businesses that were very, very, very competent or had been doing it for a long time. It's evolving and it's getting better, and we see exchanges now offering fix.
Well, Coinbase
Yep.
do offer fix, though I've got some... Yeah, they haven't harmonised.
It's like the 4th time we've mentioned them in various different pods. It's
I
almost
know,
like we're sponsored
obsessed.
by them. Yeah.
Come on to the pod, Brian.
Yeah. Come on, Brian.
I'm bald too.
Bald lives matter.
Yeah. But yeah, so I think we'll see a move. I think the problem is, and this is what's interesting and also hard, is you have to be completely multidisciplinary now, right?
Yeah.
Because actually now you have to be competent in some of the TradFi stuff because that's where some of the exchanges are going.
Yeah.
But you then still have to be competent in this like strange crypto long tail of like strange
DeFi stuff.
Well, I was just still talking about centralized.
Really?
Yeah, DeFi.
Okay.
Yeah, I mean, at least the structures and stuff. And for example, W.M.C send their private messages with protobuf.
Okay. Different encoding?
That's it's a way of having the compression.
Yeah. Okay.
So like it's a way of compressing the data, like it's a binary representation of.
So
because it's not even just a string.
When you're trying to work out what the price of Bitcoin is, and you decide that for whatever reason you think that MEXC is a good venue to get that information from, and you also think maybe I should get it from Coinbase as well.
All of a sudden, you've got to be thinking about the fix. Streaming data via fix from Coinbase, because I think it's Coinbase derivatives only, just fix.
Okay.
And then your MEXC, you have to be thinking about your compression algorithm for your protobuf.
Right, so
the representation
which might be different from the way that the data is compressed from...
Well, say Binance might just send it like an adjacent string. And
right, okay.
So it's very interesting that you have more technical requirements.
Yes. And when you're talking about speed, which obviously when we talked about in the previous episode, the price of Bitcoin and how when you're collecting it from geographically dispersed venues, you have to think that this was the price when the message got, or the trade or whatever, the update happened in that venue, and then there's a little bit of time till it got to the edge of that venue, and there's some time to get to me.
It might have taken a different route to get to you by the way as well.
And the choices you make around the technology that you apply to deserializing this information is important, right? Yeah. So you need to, as you said, you need to have the chops around the computer science and how computers work and
how the networks work, and then that's before you even start to apply any of the finance and statistics that might be to interpret
what
the data
does this
that
information
mean to me.
Yeah.
Yeah.
And how can I use it to dump on that shitcoin?
Yeah,
Because that's all we're here to do.
that's what we're trying to do.
Yeah.
And it's the same. So that's just on the market data side thing, and it's also then the same with the order placing thing. So there's two sides to this tale, right? There's the market data, which people generally might call a market data adapter.
Yeah. And so, sorry, you go on.
No, you got a question?
No, I was going to ask. So if we're thinking about getting the prices in, and we're saying this is something that's integral to all market makers out there, unless they're absolutely crazy, they need to know what the prices are. Why is getting that information in the first step in what they do as a market maker?
Well, you can't. You need to know. You need to have that information to even to determine where you're going to place your orders, right? So the job of a market maker, at a very, very high level, is to place orders into a order book that provide liquidity to both buy and sell. So two different prices: a price to buy and a price to sell. Such that people who want to trade, there is liquidity there. That's what liquidity is. We talk about this idea of what liquidity is. Liquidity is orders
that you can interact with.
That you can interact with, where you can buy prices you can buy and prices you can sell.
And so a market maker needs to do it rationally. It needs to know where to place those orders relative to the price of the thing that it's
exactly.
trading.
But there's no good to if you don't know the price of. If you don't know the price, let's ignore the geographically dispersed pricing problem, and let's just think there's only one exchange, and we're only interested in trading on Coinbase. My favorite venue.
Thanks, Brian. He's going to come.
We're trading bald USDC. If you need to know really where to place those orders, otherwise you're either going to place them wrong, and there's no one's ever going to trade. It's not really providing liquidity where the action is. This is presuming the market maker wants to get fills, right? So getting in that pricing information is the first step, and anyone who builds a market making system will surely start with market data adapters.
Right.
And if you don't start with market data adapters, you are insane. And that's before we then get into the notion of what you might call an account adapter or an order gateway or somewhere where you would actually once you have some market data,
do something with it.
You've made a decision. You might be very simple market making strategy might be the price here that people would buy and sell at is 99 and 101. So I'm going to place my orders at 98 and 102.
That's me done. Thanks very much.
Market making 101. You've passed the course. Okay, so how do you put those orders of 98 and 102?
And then it's kind of like the opposite problem. It's like, okay, my computer here knows what I want to do. But the venue over there doesn't know, and I've got to get that information, put it in the right format, send it back over the right message
transport
structure and all that sort of stuff.
The one that they can understand. Now, of course, in TradFi, it's all fixed, isn't it?
Right.
So in TradFi, you get fix in, you decide what your business logic is, and you put fix out. Unfortunately, not the same in crypto.
So
and when I'm talking about centralized exchanges, but so you might get WebSocket for your market data coming in. But then they might.
So I'm sucking down trades,
order books, and I've made some business decision. My fancy strategy. Right, okay, and now I want to put my orders in the market. You'd think maybe it's going to use the same protocol, but no, sometimes it's a completely different protocol.
Seriously?
Yeah.
On the way back out?
Yeah.
WebSocket
in, rest out.
Okay. And why is that? Who knows? And it's really interesting. There are some exchanges you can see of like bolted WebSocket trading on the end. Like, so Bybit, for example. WebSocket streaming for market data, but it was only REST for inserting, cancelling or whatnot. And then they've added on WebSocket trading because WebSocket is a little bit faster. It's a little bit more efficient to have this two-way communication open all the time. Well, if you're proper OG, you remember this. It all used to be REST, and WebSocket wasn't really a thing at all. And so it was like polling for
the
market data.
Which is obviously because we've talked about the market data being streamed to us.
It wasn't even the case. And I mean, even quite recently, some exchanges were still just moving to that.
Well, even Hyperliquid requires polling for some data.
Right. So I distinctly remember you'd poll out for your market data, do your business logic, and then send it out by REST. And at least you just had one protocol to do with you. Like, thanks very much.
Yeah, exactly.
And then suddenly everyone was like, okay, I'm going to fire hose you some WebSocket information, which, it might not be like the gigabytes that's coming out of like fix from one of the TradFi exchanges, but it's a decent amount of information across a wide range of underlyings.
Yeah.
And suddenly you've got to retool your whole system because you had I was quite comfortable polling every 5 seconds, and now I've got updates every 10 milliseconds.
You can't run a high frequency market making strategy polling every 5 seconds, right?
No, but no one else had the ability to do anything better than
So it was kind of level playing field.
Yeah.
Is it the equivalent of the spool of wire that they used to slow you down?
And so that's not cutting edge, not fixed, not fastest, plus the fact that it's still going over the interwebs. So everyone, mainly, we know some venues that bias people slightly, but mainly everyone's dealing over some version of the public internet or within at least the same AWS stuff.
Crowd.
So there was, this jitter that everyone has to bear. That levels the playing field.
What's jitter, Tim?
It's the distribution of message times. That's my understanding of it.
I think it's this. Yeah, it's the idea that the packet of data, a little piece of information that wants to be sent out, could take multiple routes to get to you, and therefore, because it could take multiple routes,
not deterministic,
and so you get a distribution of of latencies.
Whereas TradFi, certainly for co-located entities,
there will still be a jitter, but it's going to be hardware level jitter, right?
And people talk about almost the level that there's still networking involved.
Yeah,
but it's pretty deterministic now because they're very, 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 very fast.
They'll be worrying about it's several orders of magnitude.
It's a hardware.
Yeah, they'll be worried about if the 50 hertz of the electricity. Do you know the story?
No.
About talking about network time protocol.
Yeah.
So we were talking about timing and distributed systems. They could measure by basically all these. They're sending these time packets between all these different servers, right?
Yeah.
And they're all talking to each other to keep each other in sync. And they could measure when the kettle went on in the UK at 5 o'clock with the tea, because it actually means the hertz of the electricity network slightly lowers from like 50 hertz to like 49.9.
Because of the draw of all of this.
Which causes, because the computer's clock cycle... Yeah. The gigahertz, so 4 gigahertz processor. It's a good junior quant interview question. What's the how many cycles per second if it's a 4 gigahertz processor? Per nanosecond, sorry. It's 0.25. So you've got these number of cycles.
Yeah.
And they're actually determined because the clock's been driven by the alternating current.
Yep.
So the computer clock slightly slows down.
Wow.
And then that clock starts reporting out to all the other clocks its time.
And they all say, you're wrong, dude.
Slow.
You're wrong.
Yeah. So you can actually use the synchronization of the computers can actually detect when the electricity network is being things. And I imagine this I would call that like a hardware level of latency. I'm sure they
thought about it. I'm sure. Yeah.
Of course, maybe they've got their separate generators or something that are absolutely pumping out the same AC.
Goodness me. Okay, so industry-wise, thank goodness we don't have to deal with that stuff yet. But this problem of getting information to and from is something that we do deal with a lot, and it comes back to that idea that what market makers as a whole and what the trading industry does is not always easy and obvious to people. So when people hop onto Twitter and slam businesses for behaving in a way that they think they have done something nefarious with someone's token, it's not really where I focus, guys.
I'm worried about problems that are very different.
Yeah, very different. I'm trying to work out what the price of Bitcoin is, and I need to get this information. And someone told me about.
It's not even the price of trying to work. I'm just trying to work out what the information looks like.
It looks like. And the API docs say this, and I'm getting this information. Yeah.
Yeah.
So not always easy.
Not always easy.
So
I think that's going to be the upside of these more technical discussions rather than macro discussions. Is the end point is always going to be it's quite hard.
Yeah. Or it's just it's a challenge that's not obvious if you're standing outside of this type of business. And of course there are hopefully some people listening that are inside this type of business and they go, yeah, I have to deal with that. That's
boring.
Yeah, scroll forward. But for us, this is the daily, and I think we find it engaging, right? This is
it's that go back to what we said. It's that intersection of these very almost distinct disciplines that seem to meld and interact at this thing that we're trying to do.
Completely. For me, that's why I've enjoyed...
What's finance got to do with networking?
Right.
Everything.
Yeah. I've enjoyed my career to date because it's always been this crossover of maths, computers, and other disciplines. And I think people that like or in the space, they usually find that interesting as well. And they might have, as you do, skills that allow them to draw on their knowledge of all those different areas as they apply it, which is kind of cool. If you like this type of thing, let us know.
If you've got anything that you want us to talk about, or we'll just keep going on with the how to build a market maker series.
Yeah, exactly. So have we got a price of Bitcoin yet?
No.
So we've said that there's lots of prices.
We've just managed to
differing levels of use.
Yeah.
And we've talked maybe about how we get them, but we haven't talked really about how we do anything.
And that's we haven't even got into placing the orders yet.
No.
And we've got anywhere near what happens once you get a fill, and then you've got to manage the inventory.
Pray I don't get filled.
No, you pray you don't get filled with negative edge.
Oh yeah. Okay. filling positive edge is good. Filling negative edge is bad.
Yeah.
Inventory risk, etc., etc. So maybe if you want to hear us talk about those, we'll talk about those in a future episode. Thanks very much for listening.
Cheers.